My name is John Whitefoot, and welcome to another episode of Income Investors. With me today is Mo Zulfiqar with another exciting income pick. If you want to read more about what we write on a regular basis, check out incomeinvestors.com, or you can click the link in the description below. When it comes to making consistent income from the stock market, understanding a few key dividend terms can make all the difference. Whether you're new to dividend investing or looking to sharpen your strategy, knowing how these terms work can help you avoid traps, spot real opportunities, and build a portfolio that pays you reliably. Now, in simple terms, Mo is going to tell us about five essential terms every income investor should know. So, Mo, what's the first dividend term?
Thanks, John. I think the first term is dividend yield. In many cases, it's the first thing income investors look at, and sometimes the only number. It tells you how much annual income you're getting for every dollar invested. In simple terms, dividend yield is equal to annual dividend divided by the stock price. But here's the thing, a higher yield can look extremely attractive, but the key is a high yield doesn't automatically mean a good investment. Many times, stock has a high yield because the share price has been dropping, which could be a sign of trouble. Sustainable dividend come from strong businesses and not falling prices.
And dividend term number two.
The next term is ex-dividend date. This is one of the most important dates for anyone collecting dividends. To receive the next scheduled dividend, investors must own shares before the ex-dividend date. If you buy the stock on or after this date, you're too late. If you miss the date, you miss the payout. It's that simple. Income investors who track payouts closely always have the ex-dividend date marked, on their calendars.
Now, dividend term number three is the record date. What's that?
So the record date is the cutoff date a company uses to determine which shareholders are eligible to receive the upcoming dividend and which are not. If your name is on the company's book at the close of business on the record date, you get the dividend. And this date works hand in hand with the ex-dividend date. The record date itself doesn't affect the stock price. It's mostly, an administrative marker, but it matters because it helps investors understand the full dividend timeline. If you want to collect the payout, you need to buy before the ex-dividend date so that you are officially a shareholder by record date.
And number four, the dividend growth rate. What's that?
Reliable dividends are great. Growing dividends are better. The dividend growth rate measures how much a company increases its dividend over time. Companies that raise dividends consistently often have, strong earnings, disciplined management, and long-term shareholders focus. This is where long-term income investors build wealth. Even small, steady dividend increases can compound, into meaningful income over years.
And what's the last dividend term income investors should know?
The last term, in my opinion, is a dividend reinvestment plan, or DRIP for short. Essentially, it allows investors to automatically reinvest their dividends into more shares and often commission free. And sometimes they can even get a discount on the share price. Drips, in my opinion, are one of the easiest ways for income investors to grow their positions without adding, new money. Over time, reinvesting dividends can significantly boost returns, thanks to just the power of compounding. And I will just end with this. Income investors who stick with drips typically see their share count and dividend income rise steadily.
Thanks, Mo. Understanding these five dividend terms, dividend yield, ex-dividend date, a record date, a dividend growth rate, and DRIP can give investors a huge advantage. They help you evaluate dividend safety, predict long-term income potential, and avoid common pitfalls. Dividend investing isn't complicated, but it does reward those who know what to look for. And as always, the best opportunities tend to be in companies that consistently pay and grow their dividends over time. That's it for today. Make sure to go to incomeinvestors.com or click the link in the description below to see what we write on a regular basis. We'll be back with more income picks soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.